Then the debt market or the bond market. When you get a bond is issued by a corporate in order to get loans from the public. The bond issuers are the lenders, are like the banks. Okay. So the Indian securities market, the term bond is issued to debt instrument issued by central government, state governments and public sector organizations. And the term debenture is issued when it is issued by a private corporate sector. Got it? The basic difference between bond and debenture. Many a times it is asked in exams what is debenture. People used to get confused. It is nothing but simply a bond. If it is issued a bond, a bond issued by governments, a bond issued by a corporate entity, a bond issued by a public sector entity, then it is a bond issued by a corporate entity or a non-public sector entity is called a debenture. It is as simple as that. There is no confusion on bond and debentures. It is as easy as that. This is not a commercial paper. This is a bond. Commercial paper we will learn in money market classes because commercial papers are money market instruments. Bond issuer is a borrower. Yes, bond issuer is a borrower. The buyer of the bond is a lender. The buyer of the bond is a lender. It is as simple as that. Debt instrument represents a contract whereby one party lends money to another in a predetermined term with regards to rate and periodicity of interest, repayment of principal amount by the borrower to the lender. And this is the difference between equity and bond market. Equity you become owner, debt market you become a lender. The nature of return is very variable, very unstable in equity market, whereas debt it is stable. Return you get dividend or capital appreciation. Here you get regular interest. So in some other class I took a session on how bonds are issued. So remember few terms related to bond. When bond is issued or you buy a bond, you don't get interest. Whatever you get, it is called coupon. Okay. So a bond, the face value of a bond is rupees 100. Right? Rupees 100. Take it for example, rupees 100 face value bond. That means in the bond paper, on the face of it, rupees 100 will be mentioned. Generally, it is issued at a discount. So when you buy a bond, you will not buy it at rupees 100. You will buy it at rupees 94, 95, etc. And on maturity, you get the face value. Okay. So, and if a bond is issued at same price, it is called issued at par. If it is issued at a low price, it is called issued at discount. If it is issued above the face value, it is called issued at premium. So normally it is issued at a discount. So the difference between the issue price and the face value is called the coupon rate, and the coupon rate is your profit or the interest income you get. Okay. So in bond market we don't call it coupon rate, we call it what we call it? Coupon rate. Okay. In the last one of the MCQ sessions, I have shown an example how the price of the bond and the interest rate are inversely related. So that I will take in some other session. Commodity market. So nowadays commodities like crude oil, metals, coal, dal, sugar, rice, or soybean, maize, wheat are being traded. So there are certain MCX like stock exchanges. So these instruments are nowadays being traded. Not only share market, corporate shares are being traded, but also the maize, etc. are being traded. Okay. So here are some examples. Here are some name of some stock exchanges. Multi commodity exchange MCX, which is most popular exchange for commodity market. National commodity derivatives market. Indian commodity exchange ICX. National multi common commodity exchange NMC. Ek derivatives exchange, universal commodity exchange. In 2018, both NSE and BSE launched their trading in commodities. Earlier, commodities market in India are being regulated by Forward Market Commission, but in 2018, the Forward Markets Commission was merged with SEBI. So now SEBI regulates it. So some other terms: insider trading, trading on confidential information. If somebody is working as in a company and having some insider information. That means before the release of quarterly result of a bank, if one employee knows that ICICI Bank is going to have a huge profit, then they will leak the information to their relatives and buy shares, and after the result is declared, when the share price goes up, they will make a huge profit and sell it. That is insider trading. Hedging is reduce risk. Hedging means you bought a stock, you know that stock prices will go up, so you bought a stock, but after 5 days there was a Adani related news. You now know that the stock market will fail like anything. Your portfolio will vanish in some day. So you take a contra position, like you take a negative position, you short or you buy a put, so that even if the share prices goes down, you make profit. Arbitrage, if you find one share of Indian oil is rupees 80 in National Stock Exchange, and same is trading at rupees 81 in Bombay Stock Exchange, you will buy from National Stock Exchange and sell it in BSE to make 1 rupee profit from each stock. It is simultaneously sale and purchase of securities to reduce the risk is called arbitrage. Okay.
If you are a public sector banker and eligible for promotions this year, then you have landed at the right channel. In last 3 years, we have produced more than 5,000 results in bank promotions exams, starting from Reserve Bank of India to SBI, PNB to IDBI Bank, Punjab and Sindh Bank to Bank of Baroda, Indian Bank to Central Bank of India, in all public sector banks. We have a dedicated course for you, and higher the scale, greater the content is. So don't miss out this opportunity to grab your promotional aspirations this year. Visit our website, check out the links in description, or WhatsApp us at the given number to connect with us. Stay prepared and wish you success this year.